What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. Today's video is an interview with one of the founders of Metapool. Metapool is the largest liquid staking solution on Near, and one of the largest DeFi apps on Near altogether. In this interview, Claudio goes through what Metapool is, because it's much more than just liquid staking, why they chose to build on Near, and also his efforts to spread Web3 and blockchain adoption in the Latin America region where he and his team are based. You're not going to want to miss this one. Let's get into it. Welcome to the show, Claudio. Claudio is from Metapool, the #1 liquid staking solution on the Near network, and also a lot more than just a liquid staking solution. Welcome, Claudio.
Hey, Patrick, thank you very much for the invite to the show. I'm really excited to be here with your community and just share a little bit on what's happening over in the Near ecosystem and specifically on the liquid staking side.
Cool. Yeah. Welcome, Claudio. We cover Near a lot on this channel, and then I got to know Claudio through a mutual connection, and I thought what they're doing was pretty interesting, so I wanted to bring him on to share it. Claudio, why don't you give everyone in the channel a bit about yourself, a bit of a background, and also about what Metapool is for people who aren't familiar.
Yes, so my name is Claudio. I'm one of the founders, co-founder of Metapool. So I've been in tech for maybe 23 years or something. So yeah, so I still don't have gray hairs, but yeah, I'm kind of the old school people coming into the web.
I thought you were like 30 years old, to be honest.
No. So I'm 43 this year. So it's yeah, it's just staying young, staying active, I reckon. And so I come from a traditional Web 2.0 background, right? Or I mainly say it's a SaaS side. So I used to be head of product for a developer partner for Atlassian. Before that, I launched like the product department or area for a consulting firm here in Mexico. That's how I got into the Atlassian ecosystem, into the Zendesk, Freshworks, Salesforce, all things SaaS and marketplace related. So I have been doing that for the last 8 years until last year, December 1st. I took the plunge and yeah, I started to be full on crypto on Web3. And how I started was basically 2018. I started getting exposure to BTC, to ETH, Litecoin, XRP, and a bunch of them that had low fees for us Mexicans trying to get dollars quite cheap without paying a lot of transaction fees. And so that was kind of my first exposure into crypto. And through being a limited partner at a local fund here in Mexico, they wanted to launch a liquid fund when that was a thing. Of course, that didn't go well. I understood what securities are, but through that exposure, so the fund was trying to set up a smart contract for the liquid fund. And so that's how I started understanding smart contracts, what Solidity was. To be honest, I was a little bit taken back in the sense like, okay, this is like, you felt and saw that it was like early stage, right? And then, but then again, I was like, okay, so this smart contract is gonna handle around $5-6 million fund, and this can easily be hacked. And I'm like, okay, so this is quite alpha, right? And so, but that once that bug bit me, I'd never let go, right? It always stuck with me. And then when I got exposure to understanding how decentralization of data is important for companies, so you have to understand that I was coming from a SaaS background, and most of our customers, like Fortune 500, saying, hey, well, and I was in the document management space. And they said, hey, but who owns the data? And like, well, you own it, right? But then again, you see into the architecture and the design, and no,
They don't
they
really
don't
own
have,
it, right?
they
Yeah.
don't really own it. I was bullshitting, right? Even though the contract, right, that they signed says, yes, you're the sole owner of the data, whatnot. No, one, the data is hosted either on a cloud service, AWS, Azure, whatnot. The logic is owned by our application, which is also in the cloud, which is also not owned by us, to be honest. Yes, you have the right to the IP, but the ownership of it, like if you go into the fundamentals, Amazon has it, right? AWS has like everybody by the balls. Let's be honest about that one. And so that got me started like, okay, can I build a solution where when a customer comes to me and says, who owns the data? I can clearly say, and not only say, but prove with on-chain information that yes, you own the data. Why? Because you signed it, right? Because you are one way or another storing it. So anyhow, so that got me started. 2019, everything went it went really downstream, right? And so I started seeing a lot of applications being built on top of Ethereum. That got me started. I participated in a couple of ETH global events. And then it was through my participation through some roll-up funds in AngelList that I got invited into the CoinList beta. So that went really well. I think those have been my best investments I've done so far. So I got into Blockstack, I got into Near, I got into Solana, Celo, Rally, and a couple of them. Because at that time you have to understand
pretty
that
formidable list.
And no. So that one really good. But at the end of the day, I didn't get into them to get as an investment. I got into them because most of them, if you go into their CoinList offering, it was really developer focused. It's like, we want to build this. This is a roadmap. This is what's going to happen, right? And for me, it was the first time that I was able to see something that it was palpable, right? And to be honest as well, I trusted the CoinList team. That's the other one, right? Because you have to understand, I was coming from this ICO mania where you were depositing your your ETH or your BTC to God knows what wallet, right? And for me, I was never comfortable doing that, right? I participated in the liquid fund because I knew the fund managers. I got wrecked on that one because that was a security that didn't get off the ground, right? But that's fine. I understood the risk there, but when you're talking about a project and their tokens, you need to understand like where's the utility for it, right? And so I think CoinList did a really good job there, right? And so yeah, I got some good exposure. I can't complain. I got more than my fair share. Even with this downturn, like I'm still golding on a couple of them. And so I started building first on Blockstack. And so I set up a team. I need to give a shout out here, like to Hector, Manuel, there's Alejandro, Rodrigo, right? They put their heart and effort into like all these POCs that we built. To be honest, none of them took off. Participated in Blockstack, did 2 POCs there, didn't work out. Then they shifted to Stacks or Hyro, I don't know what. Solana was like super difficult to build, even though like some of my team members knew about coding on Rust, but it was so difficult to build on Solana. Then Celo was more on like on the banking the unbanked, and the narrative coming from a couple of Germans telling some Latin American guys about banking the unbanked. Let's say that felt a little bit short. And then, to be honest, my third try, then we participated in ETH Global, then DeFi Summer. And then, because we were building a decentralized document management solution, you have to understand that I was still not full on DeFi. I was still coming from the SaaS background. And then DeFi Summer comes in and makes it impossible for you to build like a consumer-facing application on Ethereum. Just impossible. It was like, we did like the spreadsheet tokenomics on it, and people will be paying more for gas than for the application itself. And then we closed down shop on that one. Near was our last try. I was totally like in the mode of like saying to everything, you know, F off, right? I'm just gonna stick, I'm just gonna buy BTC and ETH and that's it. And it's just an investment in that side, but I'm not gonna build anything on this because it's just impossible. It's either sometimes the testnet doesn't work. It's either sometimes that the mechanism to deploy on mainnet is so not a steep learning curve, or the second one is like impossible to do transactions on the network. So at that time, I was like, I was about to just quit. So we participated in a Near hackathon. The thing worked, right? It was fast. The wallet worked. The only problem there was the storage side. So you need to understand that we're trying to build a document management solution where all the document information was owned and stored by the users themselves. And at that time, the Near protocol didn't have a good way for us to store information. So we did a POC with a Firebase middleware there. And to be honest, we didn't want to lie to ourselves, right? That's not decentralized. That's still the same solution that I had over on the SaaS side, but built on top of a blockchain technology. But at the end of the day, it worked. So that was the aha moment for me. It was like, yes, I can build on top of Near. And so with that, I started to dig into the community. I made 2 years ago, it's going to be 1 year ago, sorry. I posted on the governance forum, hey, I want to launch the Spanish speaking community for Near. And so that's how Near Hispano started, just and really focused on educating. Because this is another thing that I think most layer ones are lacking. There's no roadmap for educating the end user. And I think this is where Dynamo DeFi does a very good job, is like, you are teaching people the ropes, right? But then if somebody wants to go deeper into the rabbit hole, you cannot just push people into a Git book. You cannot just push people into a wiki. It doesn't work. Like, and it's catered for the developers and the builders, yes, but for normal people, for normies, it's just not going to happen. Nobody's going to go into your Git book and it's going to read it, right? If you're not technical.
It needs to be intuitive, right?
Intuitive and tailored for who's going to consume that content, right? I think that's super important. So with Near Hispano, what we did is, okay, let's launch a couple of webinars. Let's launch some boot camps. Let's partner with Near Education or Near University and see what we can do to start teaching about building on a blockchain in our own language, in Spanish. Because that's the other thing. Everything is in English. And don't get me wrong, Patrick, I have no problem speaking English or reading English. But if any layer one is under the narrative that they want to onboard the next 1 billion people into crypto, it's not going to happen in English. That's the reality of it, right? It's going to be either in I don't know, in the more than 53 languages in India, right? Or I don't know how many versions of Cantonese or Mandarin there are in China. So it's going to come from there. But the low-hanging fruit is that you have more than 32 countries, or I think it's 36 countries that speak just one language, Spanish, right? So, and you have a bunch of people there, right? You get your more than 1 billion people there. And so that's the narrative around Near Hispano, right? At that time, I didn't have any product. I was like, okay, I know I can build on this. I want to build a community, start to get to know builders, and then the next bounce of the ball. And that happened when I met my co-founder, Lucio. So I met Lucio by asking the community, okay, who's building in Latam? And everybody pointed, Lucio's building. Okay. And so I got introduced to him. I interviewed him for the webinars and whatnot. And then he started talking about the project called NAR Wallets, which is a Chrome extension wallet based for Near, kind of like the MetaMask for Near. And Lucio was like, yeah, we're building this. You should join us. Let's do this. And I'm like, And this is where my SaaS background comes in, right? Marketplaces. I'm like, okay, Lucio, what's your total addressable market for this? And then, well, there's around 100,000 stakers at that time, staking on Near. I'm like 100,000 people. Okay, well, no, it's not even 100,000 people. They're wallets, which you know how that can be gained. I'm like, no, Lucio, like this is not gonna fly, man. But like, you're not gonna get the MetaMask business model. The MetaMask business model works because it's just the sheer amount of exposure that Ethereum has, right? It is, and we need to tip up our hats here. It's like, it is where most of the transactions are happening on any layer one. Let's just bar none. And so it's normal. They can build a business model on top of that. For Near, at this time, it's not possible, right? We're still in doing baby steps. And that's what makes it so exciting as well, right? Then fast forward December 2020, Lucio comes back again. Hey, Claudio, I have this one. It's liquid staking. It's called Meta Staking Pool. I'm like, okay, send me the white paper. And it's a derivative, right? It's a financial derivative. Okay, so you got your token, then you delegate it to a couple of nodes, and then you mint a token which is basing, okay, the rewards. And I'm like, okay. So I'm like, okay, Lucio, this is tricky, man. I don't understand this, man. I don't think so. January 2021, he sends me Lido Finance, and I started looking into Lido. And okay, now this is much better explained, right? I go into the YouTube channels, right? All the Constantine interviews, all the Ethereum Denver talks, or the Ethereum events, right? And I started understanding the potential. Then in 1 week later, I said, okay, Lucio, let's do this. Let's launch this one. The only thing at that time is I was still working full-time for Atlassian, right? And and then I said, okay, Lucio, so let's do something. I'll dedicate 4 hours per day from now on until the day we launch. Then after we launch, I'll put in 3 months, same effort, and then see if it sticks. But I do not want to raise any money. I do not want to do any grants. I want to do like a full-on organic launch on this and see if it sticks. And this is the mentality that I have, like from the SaaS perspective, right? You build it, you ship, and then you take the next steps, right? And we did like the tokenomics on it, right? And I'm not a financial guy, neither is Lucio, right? We know some fundamentals and that's it. So we tried to do like a spreadsheet. Okay, so how much staking could we allocate? Fast forward 24 hours into the launch, we had $7 million in TVL. We made we made like the financial predictions for us to have $5 million by the end of last year. So 3 weeks in, and we did our community launch, we ended with 23 million in TVL.
Wow.
And so, yeah, at that time I was like, I was happy, but I was also like sweating, right? Like I had a full-time job, and it wasn't like I was like just one guy delivering something. No, I had like a 12-person team and 3 products over on the Atlassian side. And I was like, okay, this is gonna become an issue, right? And so for the next 4 months, I was like working double time. I didn't get any gray hairs because of that. So I think I'm battle tested now. But at the end of the day, it showed that you can build organic projects on top of Near. And for me, it was like a test of, okay, this is something I'm gonna be doubling down on, right? Fast forward, we raised an initial round led by Dragonfly, Move Capital, Ant Finance, or Ant Capital, Blockwall, D1 Ventures, right? Like some good name VCs. And we started continue building on top of that, right? And it has been nonstop since August 23rd last year. We're coming into our first year anniversary, right? Right now we have more than 10 million tokens, Near tokens being staked. With the new pricing, it's around 53 million or 54 million. But it's quite a journey, right? when we ended last year, when we started in January, we had around 3.5 million NEAR being staked. So right now, 10 million, we have more than 10,000 wallets interacting with the protocol. And it's just been a ride, right? We started the year with like 5 people. Now we're 24 people. And it's just a sheer amount of growth. And even with this current market conditions, like it's been a ride, right? For me, I'm being grateful to be surrounded by good people that want to work. And more importantly, understand the vision that for us, and this was from day one. This is where Lucio and myself really clicked. Is we're putting NEAR token holders front and center of everything. Like there's no way around it. I said, if this is going to be core infrastructure, if our liquid staking asset is going to be our flagship, then we need to understand that this is for NEAR token holders. And here we are. Like it's been, I don't know, it's been quite a ride, to be honest. And I'm really grateful that I did to jump into crypto. And for those that are thinking, should they jump or not, even with this market conditions, what I say is do not pay too much attention to the pricing. Understand what kind of value you're going to be creating and what kind of value you're going to be creating for yourself as a professional. And I think for me, I think we're back at where kind of like the iPhone event, right? Like for builders that were the first builders that got into building on top of iPhone, they're like super solid, right? Most of them right now are irrelevant, maybe like Angry Birds and Rovi on a couple of those, right? But they rode like that wave for like 10 years. And this is something that I would incentivize everybody to have a crack at Web3.
That's actually something I always like to say, like the mobile analogy. I say, imagine when your wallet becomes as ubiquitous as your phone, right? And all the applications and use cases and infrastructure that will need to be built in order to make that a reality, and then we'll be sort of in demand based on that.
Yeah, it's and I've seen the 2 waves come in, right? First, it was the social side, right? Like they call it mash apps. I can't recall the name, or it was like the Web 2.0, what it was called that, right? Then it was the mobile space, right? And I've seen those played out, right? At that time, the Web 2.0 space when Facebook, I was totally naive on it, right? Didn't truly understand that. For the mobile, I did understand the potential. I just didn't believe it. That's the problem sometimes we have. I said, how can we spend $1,000 on a phone? It's ridiculous, right? When like with the Blackberries and even the iPhone came out, I said, I'm not gonna spend that money there. That was a pretty big fuck up. I should have seen, like, and I was working at that time doing mobile app competitions for Telefonica in Spain. And I didn't believe it. I just said, this is just gonna be a fad. Well, no, it's not a fad. And this is where it gets tricky, right? Because you've seen it like, and this I think Chris Dixon does a bit from Andreessen Horowitz does a really good analogy, right? It will start looking like a toy, and then it will start slowly but surely building utility as it grows and as mass adoption starts using it, and then it will become a tool, right? And then you have this whole thing. What crypto does is that, yes, it looks like a toy, but you have a ton of utility in it, right? Yes, there's a lot of speculation around it. That's the key difference, because these are one way or another assets, digital assets in the sense of the word. It's an asset. It will accrue in value, right? And so anyhow, so here we are, full on bullish on NEAR, liquid staking. I think for many of you, I didn't quite explain what we built. So liquid staking is what we're doing is we operate under a proof of stake network, which is called NEAR. NEAR by design has right now a a reward system mechanism in place. So you grab your NEAR token, you delegate it to a validator node. This validator node grabs that NEAR and then starts doing a service for the network, which is securing all transactions and verifying all transactions, improving censorship resistance and security for the network. The problem with a proof of stake network is that when a NEAR token holder delegates that NEAR to a validator node, it's immovable. That means you cannot move it. It's non-custodial, which means that the NEAR token holder is always in control of that asset or those tokens, but they cannot be moved. And the reason for this is that by not moving, you're helping secure transactions on the network. And by doing so, you're generating rewards for that node, which is then distributing those rewards to all the stakers on that validator node. So what liquid staking does, or in this case, what Metapool does, is that it allows users to delegate their tokens, but then through our design, what we do is we mint a liquid asset, which is a derivative of the NEAR being staked and the NEAR rewards being generated every 13 hours. So that means that our liquid token called ST-NEAR, it's always accruing in value every 13 hours. So it's always slowly but surely earning the rewards, accruing those rewards. And that token is liquid, which means that it's representing your NEAR and the NEAR rewards on top of it. And this solves three important problems for any proof of stake protocol. One is immobility, right? It means that your NEAR is it's not only helping secure the network, it's also flowing back into the ecosystem. And this is capital efficiency. So that's the second thing where a liquid staking solution helps. The problem when you're bootstrapping a network is that, yes, you want as much NEAR to be staked so transactions can be secure and the network can be censorship resistant. The problem with that is that, of course, if the tokens are not flowing in the ecosystem, there's no transactions to validate. So it's a give or take scenario. What we say is that, yes, you can have your cake and eat it too, right? So you delegate your NEAR, and this is the other thing where we're helping the ecosystem, is we are right now, when you delegate your NEAR tokens to Metapool, when you're using Metapool as a delegation system, it's delegating it to 87 validator nodes out of the 100 validator nodes on that network. So you're basically helping NEAR be more secure, you're helping NEAR be more capital efficient, and more importantly, you're getting the upside of having a liquid asset, which you can use in DeFi, you can use for transactions, whatever you see.
Can you elaborate? Can you elaborate a little on the spreading out across 87 validators? Because I feel like some people might brush over that, but in terms of decentralization, which I know you care about, that's extremely important.
Yes, for us, it's very important. So when Lucy and myself were thinking around the narrative around Metapool, is that our mission is to help NEAR be more decentralized. That's it. The problem when one of the growing pains of building this network is that when you start with 10 or 20 validator nodes, which are concentrating all of the NEAR. And so this is a problem because if, like, say, maybe 5 or 6 validator nodes go down, that means that the network will suffer, right? It won't come to a halt, but it will suffer in the amount of transactions being dropped, not being validated. And so as it grows, those 20 initial validator nodes are still the ones that are accruing most of the NEAR, which is also a fail point for the network, right? So that's why in our design, or in Lucio's design, I need to give props here to my co-founder. He's the mastermind behind it. I'm just the one pushing the narrative and being a little bit more of a front man for the project. His design is as follows. Metapool does not stake in the top 10 validator nodes. because those are already accruing too much voting power inside the Near protocol network. So what we do is that we stake outside the top 10. So that's helping level the playing field for the validator node operators. And more importantly, we're giving them access to those Near token holders that are retail users, not institutional users. Right now, there's no direct channel between a validator node and Near token holders. It's just, yeah, you can go to the several Telegram groups and say to people, hey, come stake with me, right? And people will always ask a question, why should I, right? Why should I, when I see Block Daemon it has a validator node? Why should I, when I see Figment, Copper, Bison Trails, Dragonfly, whatever running validator, Binance, right? Why should I trust you where there are name brands running validator nodes, right? And so that's when things get tricky, right? And this is where Metapool helps, right? It's important. One of the big things, one of the big pushes that the Near ecosystem is going to do in this next quarter for Q3 is they want to onboard hundreds of validator nodes. So this is really important, but also tricky, because that means that as new validators comes in, there's less Near to be staked. Because right now, yes, people are buying Near out of the centralized exchanges or whatnot, or through DEXs, such as Red Finance, but it's still not, there's still a certain amount of liquid Near, but more validator needs. So keeping a seat is going to be an issue for many of them. And this is where we feel that Metapool will provide like a common goods service, right? And it's just giving more people more node operators exposure to retail Near. As we grow, of course, the idea is to spread that evenly. And there's going to be a couple of changes we're going to be announcing, right? When we reach around 12 million Near being staked, we are going to set up a voting mechanism for the Metapool community to vote to which validator nodes do we accrue 10% of the total delegated Near. So that's 1.2 million Near. We'll distribute that into like 2 or 3 validator nodes, but that is setting up those validator nodes to be golden, right? They're not going to lose their seat. They're going to generate some good rewards as well. So I think that's a very important service that Metapool is providing to the ecosystem, and that it's not up to us, right? This is something that we also tell our community, right? It's like, you guys are helping set up this validator nodes for success. We are just the medium for you to support them. So anyhow, so that's the idea behind our delegation mechanism in Metapool.
Interesting. And would that be a governance vote?
Yes.
Governance vote.
Yes.
Okay.
That's going to be a governance vote, and it's going to be linked also to the revenue sharing that is tied to our meta token.
Okay, which is a perfect transition to your meta token.
Yeah. So we've been slow on it, right? We've been getting a lot of comments on our Discord, right? But you need to understand that we are builders. We're not native Web3, right? I think that's a clear difference between teams that I'm seeing, right? Native Web3, they'll think about the tokenomics before even launching. They will have everything like the whole narrative in place, and then build the tool or the utility for it, right? We're coming on the other way, right? We build the tool, it has utility, and now we need to work double down on the tokenomics, right? And the community has been very patient with us, right? Because they understand our ethos, right? Our ethos is building solutions for problems or for issues that we see in the Near ecosystem. That's why we built Metapool. That's why 3 weeks ago we launched MetaYield, which is a crowdfunding platform based on our liquid staking asset STNear, and we can go into that later as well. That's why we also built Meta Recipes, which is another tool that helps you unbundle and bundle LP tokens on both the near native network and on the Aurora side. And we're going to create also a meta voting, we're calling it, which is the mechanism for the governance voting in Metapool and MetaYield as well. So we're builders. That's and we need to play to our strengths, to be honest. It's like I also needed to get the right people in place in order for us to do a really throughout deployment of our tokenomics and where we're heading. So
So you got the product market fit, you got the customers in place, and then now you're developing the tokenomics. And could you just share those tokenomics a bit with viewers and how the token would accrue value?
Yes. So one of the things here is, so there's two revenue streams for our protocol Metapool. One is, of course, the near rewards being accrued every 13 hours. Right now, as a means of bootstrapping the mechanism, we're charging 0.5%. So it's nothing. And that's going to change to be 3%. So it's going to be quite a hike. But right now, we believe that we've done our fair share of giving the validator nodes more than a year in rewards without us getting a big cut out of that. Now that will need to change, right? We're now more people on the team. At first, when we launched, we said, you know what? And this is something that I told Lucio. Maybe we can bootstrap this and just be 5 people, and that's about it. I was totally naive on it. Like maintaining a protocol just on the community side, we have 9 people there just on the community side, and then everybody else is developers, right? And so I totally misplaced the amount of effort that needed to run a protocol on crypto. It is quite the venture. So we need to maintain that as well, right? And so we're going to change that fee structure. That's one. The idea is, of course, not all of that going into the core team and paying for operations. The idea behind it is that there's going to be a good amount that should be distributed to meta token holders as well. Then the second one is the liquidity swap pool. So one of the other things that not only is Metapool providing a way for people to make their near being delegated and their near rewards liquid, we're also allowing the unstaking mechanism to be done immediately. So that's the other thing that Metapool does. So how do we do it? Right now, for example, there's 10 million tokens that are being staked. Let's say that some of them want their near back, right? Plus the rewards. They can wait. We have a delayed on stake mechanism where we do not charge any fees for getting your near back, but it takes around maybe 2 to 4 days, depending just on the network. If you want your near in liquidity immediately, then we do have an unstaking fee that it's a variable. It goes from 0.3% all the way to 3% on the total amount of near becoming liquid. And so there's a liquidity swap pool there. So what we do is liquidity providers can put in their near, so people can do the immediate unstaking, and we share a revenue fee with them.
Sorry, those are people who are pooling ST near and wrapped near, or
near only.
Near only. Okay.
Yes. They deposit near into this liquidity swap pool. It's a one-sided, right? You trade your near for your ST near, and the ST near is burned, right? So what we do here is that we charge that 0.3 to 3%. Then 55% of that goes to the liquidity providers, and then 45% goes to the protocol. And that has proven very successful, right? Either on a bearish market, we saw the last 3 weeks, like a ton of people that were getting liquidated on their positions, right? coming in, getting more ST near or getting near liquid. Like it was like we battle tested the protocol for sure, but there is a limitation on the amount of near you can get immediately, and that depends exclusively on the liquidity swap pool. So there's right now there's a cap for around 120,000 near. So that way you don't drain. Like it's impossible. It's not impossible. If, for example, somebody would like to put in 10 million near on the liquidity swap pool, you can immediately unstake 10 million near, no problems. The fee is going to be really high, yeah, of course, because they're going to drain the pool. But then again, if somebody would like to do it, yeah, for sure. But we're starting, and these are the things where the governance is going to take in place, right? Okay, how much should it be there, right? How much should the rewards be? And then, of course, the revenue as well, right? There's going to be, and then slowly but surely, we're going to make more transparent our operation cost as well, right? So the community can understand, okay, what's the burn rate for the team, right? How much do we need for the protocol to run? And so that's where the meta token voting is going to come. Right now, we're going to battle test it in MetaYield, which is the crowdfunding platform. We can talk that about a little later on if you like.
Yeah,
but
so I'd like to show people the app, including MetaYield and Meta Recipes at some point in the next few minutes. But there's a couple other things I want to touch on before we get into that.
Yeah, for sure.
So one thing that I think might be interesting to some people, there's a good number of followers on this channel who are from Spanish-speaking areas. You mentioned Near Español. Could you share a bit more about your experience starting that, and if there's any developers who are interested, how they would get involved in that?
Yeah, for sure. Well, the first things first, right? So for us is we have a if you go to nearhispano.org, then you will find all the information there. Let me share you the link so you can put it on the notes as well. And so there's going to be a link to our Telegram group. That's the best place for us to reach us. We're around 750 people there, all throughout the region: Mexico, Ecuador, Panama, Colombia, Venezuela, Argentina, Chile, Peru, Uruguay, Paraguay. So there's a bunch of people there. Yeah, just unirse, and you can see the Telegram group. So we're really excited there, and it's all about educating. So if you sign up, we are organizing boot camps every week. So it's a 5-day boot camp, so you can understand in Spanish what you're going to be doing, what can you do and build on top of Near. So that's really important for us. We're in initial talks to launch a LATAM hub for Near. So more news on that one for sure in the next coming weeks. And so yeah, it's a vibrant community. We're organizing events around ETH Mexico in August. We are also doing an event during DevCon in Bogota. We partner with Platzi.com, and so we're going to be launching also a course in their education, online education platform. And so it's been pretty good, right? It's just getting it, and this is very important. The boot camps are free. The training is free. And with that, if everything goes well, then you can apply. If you have a good project that you want to launch, then we can definitely recommend you to go to the Near grants team and apply for a grant. I think that's the next step. But first is getting yourself trained, and then for people to also get get a possible grant as well. I think that's another good opportunity right now that most people are, that is not going to last forever, right? Mm-hmm. Right now, Near is very focused on helping bootstrap the communities for Spanish-speaking audiences. And so we're leveraging that. And so pretty happy about that.
Mm-hmm. And sorry, what sort of background in Rust would someone need to have in order to participate in bootcamp?
So there's 2 steps, right? One is WebAssembly, and so they can start with WebAssembly. That's pretty straightforward. With script, it's a scripting language. The difference between WebAssembly and Rust is that you can launch on both platforms. You can launch a smart contract. The only limitation on WebAssembly is that once the contract is running, you cannot upgrade it. So once it's on mainnet and it's running, it's not upgradable, which is the difference between the Rust SDK. If you launch a smart contract on the Rust language for near native, you will be able to do upgradability on the contract logic. For WebAssembly, you can't. So just be mindful of that, right? If you want to build something more for mainnet and for more retail use or even institutional use, I recommend for them to do it in Rust.
Good for people to know. And then just for people who are watching, this would be geared towards experienced developers who are now looking to transition to building Web3 or building on Near.
No, the idea here is for them. That's why we're doing the boot camps, right?
Okay.
Also, let me share you, and they can see also the syllabus near .university as well. I think that's a great place for people to start to get to know and learn more about what can you do on top of Near. Here's the link as well. You can share it. And the boot camps there. You have the sign up there. You have like 3 to 4 hour courses as well. Everything is free, very well thought of, and taking you step by step into how you can start learning. There you can see the programs: Near Certified Analyst, Near Certified Developer. If then you want to teach Near, there's the Near Certified Instructor. And so definitely it's like stepping stones into building your Web3 CV.
Seems like a great way for people to get involved in the community if maybe they've been an investor or a user of some of these applications and they want to take it to the next level.
Yes, definitely that's the place to go.
Cool. Near University, and I'm sharing this on the screen right now for any people who were listening to this interview and not watching. That's really cool. So hopefully some people take you up on that opportunity, because I think that I always say that, the most value accrues to people who are building in the space, right? Whether that's as someone who's building a community, building an application, building educational tools, that's how you'll get the most out of participating in crypto rather than just investing. One thing I want to make sure we show people is the app itself, because I think it's pretty sleek, and I'm sure you guys put a lot of effort into that user interface. So I have that up on the screen now, metapool.app. And
yes, so you have two options there. The first one is start staking over near native. Yeah, you can just click on it and it will take you to the staking option. So there you have two ways to log in, either your Near wallet or your NAR wallet's Chrome extension wallet. And it's pretty straightforward. Once you connect, it's just how much Near you wanna allocate, and there you go. You're staking. You're generating the 10% APY. You're helping decentralize the network. And then for if you want to do the unstaking, you can go ahead and just select the unstaking option as well. Yes, you need to connect it to the wallet.
I'm connected with my YouTube Near wallet, and there we go. Unstake, and yeah, there we go.
There we go. Yes, and you can see there the ST Near price. One very important aspect that people ask us is, ST Near is not a rebasing asset. What does it mean? If, for example, you go and stake on Lido, what it does is that on the wallet that staked the Ethereum, ST ETH is going to be sent to that wallet every epoch. I don't know how much time do they generate the rewards. And this is a problem, because if you move that staked asset to another wallet, then it's not going to accrue the rewards. They're still going to be sent to the original wallet that staked the asset. We do not have that problem. The reason for this, and this is where Lucio's mastermind comes in, is that, and the reason it's called Metapool is because it's the pool representing all of the stake Near. So we don't have like an order book behind it. Let's say it's Dynamo DeFi goes and deposits 100 Near. Once it deposits the 100 Near, we don't care who it comes from, because since we've minted ST near to your wallet, then you have whatever the asset, the derivative. How we calculate the price on ST near is on the amount of near being staked on that pool and generating the rewards. So it's a very easy calculation. So there's no depegging scenario for ST near, which is what happened, I think, 2 weeks ago with STETH, that it's slightly depegged because it's a rebasing asset. And so that's another thing to consider.
And there's tax advantages, I imagine, as well, because you just have the same amount of ST near. I'm not a tax lawyer, but you have the same amount of ST near, rather than if you're receiving a payment continuously, then it's basically income that you're receiving.
Exactly.
Very cool.
You're just saying if you stake 100 near, then you'll get 99.1 ST near or something. And that's it. It's never going to change. So the accruing is done on the smart contract side, and you're not going to get any more tokens.
Very cool. Yeah, and I'm just clicking through some of these parts of the app now so that people can see it. One other thing I think is really interesting is some of the other applications you guys are building on top of ST near, because this is really more than just a liquid staking protocol. Liquid staking is great, but it's interesting some of the applications that it unlocked. Do you want to talk a bit about Meta Yield?
Yeah, so we launched Meta Yield 3 weeks ago. So when we did an IDO for the Meta token last December, we were pretty lucky on that one, that the sell went through good. We raised around, I think at that time was like $1.6 million. But we saw some gaps there, right? So the first gap is we sent the Meta being sold by the IDO platform. And once you send the project tokens to the IDO platform, that's it. Like, if they decide to rug pull you, you're done. Like, there's no account receivable for it. And we were like, okay, so we just sent, like, it was like, I think it was like 2.3% or 2.5%.
So that was, sorry, that was you as the project worried about getting rug pulled.
Yes. Yeah. So we sent it over to the IDO platform. And this is where I first looked at Lucio and said, did we just send 2.5% of all the Meta token allocation to these guys and trust that they would go through with it? And he was like, yeah, that's permissionless. Yeah, man, trustless, I don't think so, right? It's just, you're putting a lot on the line. And so that part really stuck with me. Then the second part is, once the IDO starts, there's no going back. Like, even if you do not have a good price discovery on the IDO platform, you're done. Like, it's just, there's no, if you do not reach your goal, your intended goal, you're done. It's like, well, you can have a great product, you can have product market fit, but then the price discovery can go sideways really, really quickly. And for example, right now, most IDO platforms in the last 2-3 weeks have pulled out, right? Most of the sales that were going to be done, they pulled out because market conditions, IDO platforms only work on a bullish market. And so that was the other one, right? I was like, this does not seem fair, Lucio. Like we need to, and this is another thing, putting near token holders front and center, right? We said we need to allow more projects coming into near. How do we allow this? And so we started thinking like, okay, so you know what? Let's build a crowdfunding platform and use ST near as an asset. How can you de-risk launching on top of near? And we said, easily, put support through the near rewards. Do not put at risk your main stake, your main asset, which is your near. And we started thinking, we started, trading views with a couple of our investors and some community members, and a lot said, you know what? Yes. If you scroll up a little bit, you'll find the first project, which is Pembroke Finance. So we launched that 3 weeks ago. They had a goal to reach 150,000 ST near being staked. And so we said, okay, yeah, it's aggressive, but I think we can do it, right? What they wanted to do is they put 3 million of their Pembroke tokens in exchange for for at least 120,000 ST near being staked. But here's the catch. They're not getting all the ST near. They're just getting the 10% rewards. So basically is 3 million PEM tokens in exchange for at least 12,000 near. And so we started launching that. We launched it, arrive at the goal. If you click on details, and then you'll see there the full amount. And so we definitely, yeah, it's 168,000. So we reached more than 150,000 ST near being staked, which means that they'll get around 16,000 near tokens. And this is the most important part. If they did not arrive to the first goal, then all assets are returned to the backers and to the project token. I think that's the right way to do it, right?
Like GoFundMe, sort of.
Yeah, exactly. It's like it's a FundMe platform, and I think that's the best way to do it, right? It's just if you don't arrive at the goal for your fundraising, then you shouldn't commit. It just doesn't make any sense. It's in nobody's best interest, neither the ecosystem, neither the near token holders, nor the project, because you want to have projects that where the near ecosystem thinks they're gonna deliver value. So yeah, so we launched this. We started building it in January, around the third week of January. We launched it 3 weeks ago, and yeah, we're gonna announce our second project is gonna be DAO Records, which is a decentralized record label. So we're not only catering to just DeFi, but also into the creator economy as well.
Music NFTs. Is that a music
yes.
NFT platform? That's one of the new metas, so I hear.
Yeah, so they're going to be launching with us, and also we're going to do 59 games from the Human Guild, which is the gaming guild in the near ecosystem. So yeah, we're also, of course, we're not going to deny our roots. We're going to be launching also a couple of DeFi projects. I'll make sure to come in before those are announced, so we can give you and your audience a little bit of alpha there.
Awesome.
But definitely, yes, there's a couple of also Meta Cafe is another one, which is an NFT platform we're going to help launch here. But yeah, more news soon. Just follow us on Twitter. That's where we're basically announcing most everything, or our Discord as well. Those are places where you can get some. We give away a couple of alphas now and then. So
we love alpha on this channel. I'll include links to these in the description. But what is the best Twitter to follow MetaPool on for people that are watching?
Yeah, so it's Meta_pool.
Meta_pool, easy to remember.
Yeah.
And then I'll include a link to that in the description of the video as well. Yeah, and one thing that's interesting about this is that people who are very into the Near ecosystem can accumulate new projects built on Near without actually giving up their Near tokens.
Yes, that's the intention, right? Because at the end of the day, what we want to do is allow people. Like, there's two important things here. What's the problem with IDOs? It's like it's all or nothing, zero-sum game, and you cannot build something, and that's what got Terra and its problem. It's a zero-sum game, like all to the moon or crash. That's not a long-term vision on building something that's valuable, right? Following the ethos of being decentralized, censorship resistant, and permissionless, right? You cannot build something with a zero-sum mentality. And so with that is like giving the project 12 months in order for them to accrue the Near rewards. You need to understand also that the backers are locking their ST Near for 12 months. So we can guarantee the APY goes to the project, right? But we're building on something more on top of that one. So a little bit of alpha for your viewers. So we're building a secondary market on top of Meta Yield. Because basically what we're creating here is when you stake your ST Near, we're minting 2 IOUs. One for your ST Near, so you'll get them back fully. And then the other one is for the project tokens. And those are 2 IOUs, which we're going to build a secondary market on top of Meta Yield. So for example, let's say you want to back DAO Records with 100 Near. 100 ST-NEAR. You deposit your 100 ST-NEAR, you get your IOU for your ST-NEAR, you get your IOU for the DAO records tokens, and then you go to the secondary market and sell that IOU at a discount. Let's say right now, I think we're thinking about doing it from 12 to 15%. So then you get 85 ST-NEAR back. You can go ahead and double down on DAO records if you want again. Get your IOUs. If you're fine with your 85 ST-NEAR, then you're done. But you are getting twice the exposure for the DAO records token. Or you could just loop it until you you get 15-NEAR back and you're done, right?
Mm-hmm.
But at the end of the day, you're getting a ton of IOUs for the project tokens, and through just one IOU, right? One bond, we're calling it. And so a secondary market will be built. So also for those thinking, I do not want to lock my ST-NEAR for 12 months, no worries. You will have a mechanism in order for you to make that IOU liquid at a discount. And more importantly here, that revenue goes into the Metapool protocol, right? And that gets distributed to the Meta token holders as well.
So all comes full circle.
Yes, at the end of the day, it's because we're leveraging ST-NEAR. It's liquid asset, right? And so our mentality is like, this is linked. This is value being created to the Metapool protocol itself. Yes, MetaYield is leveraging it, but at the end of the day, we feel that that's the right way to do it.
Very cool. And then I know we've been talking for a long time already, but there is one more thing that I wanted to touch on. You mentioned meta recipes when we were talking before this video. Could you share a bit about what that is to the audience?
Yeah. So one of the big ideas that we have is we believe that ST-NEAR can be the 2x4 of the DeFi of the NEAR ecosystem itself. Why? Because it's a token that's self-accruing in value. It's perfect right now for lending and borrowing, for borrow cash over in NEAR native, or Bastion and Origami over in Aurora. But what we said is like, and for the DeFi platforms, Dexes like Trisolaris, Refinance, Wanaswap, and Jumbo, is we want there is an opportunity here. There's people that have wrapped NEAR as an LP token in the different liquidity pools in the DEXs. That wrapped NEAR, it's not doing two important things that are native to that asset. One, being staked, and then the second one is allowing the network to be more secure and censorship resistant by being staked. So we built meta recipes to allow all those degens out there to that, let's be honest, unbundling LP tokens and bundling back again, it's a cumbersome process. With meta recipes, it's just 4 clicks. And not only are we unbundling and bundling back the tokens, I'm going to go 2 steps back. So what is behind meta recipes? You grab your LP token, which can be any wrapped NEAR asset. You unbundle it. Then we grab the wrapped NEAR, we unwrap it, grab the NEAR, stake it on Metapool, mint ST-NEAR, send ST-NEAR back into your wallet, and then bundle the LP token back again. And then we go and deposit that LP token into the farm or the pool. And so you don't have to go back and forth between platforms. You can do it all right there. So it's we did it for the Octopus wrapped NEAR LP token. And then we basically migrated that pool over to ST-NEAR. And not only did we migrate more than 5 million in TVL, we added 8 million more. So this is where we think we can help DEXs, AMMs, and degens get a more leverage. There's definitely more to come. We're going to announce that in 2 weeks. And so be ready for it. So there's going to be a bunch of other recipes there.
Awesome,
and this
yeah.
is going to be working not only in Near native, but also on the EVM compatible network Aurora.
That's good for people to know. And yeah, I mean, this is great for people who are sort of wrapping their heads around the implications. Basically, this is saying rather than having just Near and Oct, now you have ST Near and Oct. So ST Near is earning yield, and then the liquidity pool is also earning yield for people
Exactly.
who are trying to make that click. That's really cool, and I think that'll definitely appeal to some of the degen farmers on this channel. Now, we've been going for a while already. Are there any other things or thoughts you want to share with people, either about meta yield or the general crypto market?
Yeah, there's definitely. I know a lot of people are scared regarding like the Terra situation, right? And you need to understand that these things happen, right? It's like bad management will not make up for a great design of a protocol. It's just it can't. And this is where we think we are pretty solid as an ecosystem in Near, because we have the right people in place. Yes, we do not, as an ecosystem, move as fast as Solana and whatnot, but I think that the builder mentality should be built for the long term, right? Battle test the protocol, because when we start onboarding those 1 billion normies, this thing is just gonna blow up, right? And so it's just a patience game, and understand also play to your strengths, right? Because for example, a lot of people were asking like, are you gonna build the DEX? Like, since you're like full on builders, and I'm like, no, we already have partners there. Like, I'd rather partner on things that we believe, yeah, we can build it, but it's a whole nother thing to operate the DEX than to build it. It's just two different ball games. Both have challenges, right? Building it and then launching it and then operating it. And so we play to our strengths. We're builders, and we build solutions where we think there's some very important gaps to be filled, and where other partners can come in and also run with the ball. So hopefully soon we will be announcing who our secondary market partner will be, even though the technology is built by us. But at the end of the day, yeah, we don't want to become a DEX. And I think this is a collaboration approach to building value for an ecosystem, which I think people should not forget, because I believe sometimes you're always chasing the alphas and whatnot, and sometimes you forget that it's a team sport, right? It's just you cannot go at it alone. You need people around you and protocols and partners and just to build something that is going to be more valuable than anything you build by yourself. Mm-hmm. So I think that's just the message for everyone here. And yeah, and just a shout out to the Metapool community that supported us from day one. You've been instrumental in helping Lucio and me just get this off the ground, to the whole team, right? A running community, you know, Leona, Francisco, Ryan, Clara, Federico, Guillaume, right? That they're doing the marketing, they're doing a solid job there. Wyatt, also on the comms side. Then the development team, of course, right? Lucio, my co-founder, Ivan, Chema, Julio, Lautaro, Dani. So there's just too many people. Also Sergio, Kun. It's a team effort. It's not just Claudio talking and stating the facts, but it's just everything is on-chain, right? And everything is verifiable. So let's keep at it and make that transparency be the normal, instead of obfuscating the fundamentals of projects, which sometimes gets you nowhere, gets you short-term gains, but in the long term you're not gonna last. So anyhow, so happy to be here. Thank you very much, Patrick, for your time. Yeah, we did a bunch of talk today, so hopefully your community is gonna find this interesting. And yeah, excited to come in again and drop some more alphas whenever I can.
Love it. Thank you, Claudio. This was an awesome interview, and I really hope that people are able to watch the whole thing, because I think there's so much alpha as far as what's going on in Near with Metapool and with the Near Hispano community that you're building. thanks for coming on the show, and hope that we can have you back again sometime.
Thank you very much. Have a good one. Stay safe, guys.
You too.